Hello everyone, welcome to video lecture series of Sage School of Management. I, Aman Shukla, would brief you today all about introduction to risk. Every investor, when he makes any investment, he is going to face several kind of risk. As we know, investment is generally for a longer period of time. So, in the span of his investment, he faced several kinds of risk. It could be any systematic risk, it could be any unsystematic business risk, or several kind of risk. So, today we are going to learn about the risk and its various types. So, what is a risk? Risk, it's a basically a uncertainty about the deviation. Basically, if we define risk, that is the variability between the expected and the actual. What we have expected from our investment, that could be variable from the actual return. So, risk is generally defined as a probability that an investment gains will differ from its actual return. Okay, so now we are going to learn about different kinds of risk in the finance. So broadly, risk is defined into two major categories. One is the systematic risk and another one is unsystematic risk. Systematic risk is generally caused by the system in the environment, in the business environment. It is it contains of macro variable and it is uncontrollable by the organization. Generally, systematic risk can be predicted, and whenever it happens, it is uncontrollable by any organization. On the other hand, unsystematic risks are micro in nature. They are known, some they can be predicted in the organization and they are controllable in the organization. Like if you talk about the inflation risk or the market risk, these comes under the category of the systematic risk. But if you talk about any labor strike or any fault in the production of the company, that would come under the unsystematic risk of the organization. Okay, so in the systematic risk, we have three different types of risk, that is interest risk, market risk, and the purchasing powers. So what is the interest rate risk? Interest rate risk generally arises due to the variability in the interest rate from time to time, and it particularly affects the debt securities as they carry the fixed rate of interest. Interest rate is again classified into price risk and reinvestment rate risk. Now, second comes our market risk. Market risk is generally associated with the consistent fluctuations seen in the trading prices of any particular shares or security. Market risk generally arises due to the rise or fall in the trading prices of the listed securities in this stock market. So we have different kind of risk like absolute risk, relative risk, directional, non-directional in the market risk. Third is our purchasing power, and which is also called as inflation risk. It originates from the fact that it affects purchasing power adversely. It is not desirable to invest in any security when we have this purchasing power risk. Now, let's come to the unsystematic risk. Unsystematic risk, in this we have the first is the business risk, or it is also called as liquidity risk. Business risk generally arises from the sale or purchase of the securities which is affected by the business cycles, technological changes, etc. And in the business risk, we have generally two kind of liquidity risk and the funding liquidity risk. Now, let's talk about the next risk, that is a financial risk or the credit risk. Financial risk is generally the risk that is called as exposure rate risk. It is a form of financial risk that arises from the potential changes seen in the exchange rate of one country's currency in relation to the another country, or Like for example, investors face it either when they have assets or operations across national borders, or if they have loans or borrowings in the foreign currency. Now, last one is our operational risk. What is it? This operational risks are generally the business process risk falling due to human errors. This risk will change from industry to industry, and it occurs due to breakdowns in the internal procedures, people, policies, and the system. And it is also divided into model risk, people risk, legal risk, and the political risk. So, with this, I hope you all would have got the basic idea about the risk and the type of risk. We will learn this kind of risk in detail in our coming slides. Till then, thank you.